Hi, welcome back to Hospitality Accounting. This PowerPoint will deal with Chapter 7, which deals with the computerized accounting systems. So there are many advantages to a computerized system. I'm sure you can think about your own life and some gadgets you may have, like a smartphone, and how they make your life easier. They definitely make accounting easier. Some of the advantages that are particular to accounting is speed. Computers can process data more quickly than humans. They can automatically post to accounts and calculate balances. So the computers can do basically three things at once while we cannot. Also, they're more correct. So accuracy is better with computers, and safeguards can be put in place to prevent an error. I know that sometimes when I'm writing numbers, I might transpose them. Like if I'm trying to write 21, I might write a 12. Computers don't have that problem. Sometimes also I'll add a 0 or miss a 0. Computers again don't have that problem. They can produce many different reports, so once the information is in there, you can get the information any way you want it, and all different kinds of reports. And always, data should be secure against hackers and backed up, so you want to make sure that you have copies of your information if something happens to your computer. That data should be secure, and you want to make sure that no one can get in and steal your information or steal your client's information. Everything is got firewalls and appropriate controls in place. And I'll just take a second to remind you that also your data should be backed up. For schoolwork too, it makes sense to buy a drive, especially coming up to school time. They're on sale right now, so it would be a good time to buy one. And you can back up your information, so if something happened to your computer, you could still get to your work and your information. The next thing we're going to talk about is journalizing. Chapter 6 talked about bookkeeping, the process, and we talked about T accounts. But T accounts are informal and they're used to do analysis. The process of recording accounting transactions is actually called journalizing. A general journal has a 2-column format, one for debits and one for credits, and any transactions can be recorded. You just write the name of the account, like cash, accounts receivable, supplies, inventory, rent expense, anything, and then you use the 2 columns. Of course, the first column on the left will be for debits, and the second column on the right will be for credits. Special journals can be created for transactions that reoccur often, and many businesses, especially when everything was done by hand, use special journals, and they're made especially to record just one type of transaction. So generally it doesn't have a debit and a credit for each account, it just has what you would need. Some examples of special journals are sales, cash receipts, cash payments journal, and the payroll journal. It's difficult to put it on the screen for you here, so I suggest that you look back through your chapter. There's some good examples of these sales journals in your book, these special journals, I should say, in your book. So make sure that you take a look at them. Of course, when you're doing computerized software, you're not going to be using a special journal. You'll be more likely to be using an input screen that would act somewhat like a special journal. Next thing we want to talk about is an online accounting system. POS, or point of sale systems, are connected to a larger computer. They record transactions and post them automatically to the journal. So a lot of cash registers are actually point of sale systems, which makes sense because the cash register is the point of sale. And they record the transaction and send them to a larger computer that then takes care of the accounting. So if you think of a Giant Eagle or a Walmart and the row of cash registers there all doing transactions, and then information is sent to a larger computer. And of course you probably know this, but barcodes that are on the products we buy are used to scan the merchandise. They do lots of things. They show the prices to the customers. They update the inventory records, and they update the general journals. You record the sales information, sales tax information, inventory information, and it helps to keep our record keeping. You always know what kind of inventory levels you have. That's one of the big bonuses of a very integrated accounting system, is that you can know exactly when to reorder products so you don't lose sales due to not having the product there, and you don't keep buying it and have too much product there, tying up your cash. So some terms to know from this chapter. This chapter was very heavy on terms. One is audit trail. That references and documents that allow for tracing transactions back to a source document that provides a record of transactions such as an invoice or check number. So in accounting, we always like to have this audit trail, something that we can go back to kind of prove what happened. An invoice is a good one, a check number. Sometimes auditors will look at bank statements. You may want to look at credit memos, especially anything that comes from an outside source, so that you can prove that this is what happened. So that's an audit trail. Footing is totaling a column. So if you're thinking about a spreadsheet, adding down is footing. If you're thinking about a spreadsheet, again, going across a row would be called cross-footing, and you're just adding them up, sometimes adding and subtracting if a number is negative. So that's footing is down and cross-footing is across. A trial balance is a very important document. It's a listing of all accounts and amounts, and our debits must equal our credits. So just like when we're doing our bookkeeping from the last chapter, where our debits must equal our credits, in a trial balance that's true as well. Another term, but similar to a trial balance, is a post-closing trial balance. So a post-closing trial balance has all the same features as a trial balance, except that it occurs after the closing entries have been made, and some accounts should be closed. So you should see all income accounts and all expense accounts, all revenue and expense accounts at 0 in a post-closing trial balance. A suspense account is an interesting type of an account. It's an account used by the computer software if it cannot post to an account for any reason. So if you type in that the account number is 692 and you don't have an account 692, it will let you post it generally, but it'll kick it out to a suspense account. So it'll be an error report that you'd have to go back through. Not all computer software has suspense accounts. Sometimes they just won't let you post to account 692. It depends on how they have it set up in the system. And that was our quick overview of Chapter 7. So make sure that you do look through Chapter 7 and look at those special journals. And I look forward to seeing or hearing from you or seeing you in the WIMBA session. Thanks and have a great day.